Accounting Boffins. You are with Ashraf Patel. Our focus is cash budgets, and the focus of today's lesson, you will notice, we're going to go in and ask the first question, and that is, why do some businesses become insolvent? Remember, when your liabilities exceed your assets, then you are in a situation where a business now becomes insolvent and they have to apply for extra cash, they need to go for loans, etc., etc., etc. This could be, in some part, be the responsibility of not having drawn up a budget, a plan of action. So in other words, your budget is your plan of action. Okay. Now if you look at our budget, we've dealt with the characteristics, we've dealt with the importance, right? When we're looking at the cash budget, remember the two components. One would be your receipts and the other would be your payments. Got it? Now, when you're looking at your receipts, what do you focus on? You focus on the two items, namely your cash sales and your credit sales. The question arises, why does the credit sale impact on my receipts? And the answer is evident from the fact that your debtors are going to pay you at some stage or the other. And so you're going to be receiving money from your debtors, which would actually then feed into your receipts. So keep that in mind. Now we talk about a sales budget. Remember I said the other budgets would impact on your cash budget? The one that we look at in particular is your sales budget. So what is the sales budget all about? The sales budget of the business will include, one, your cash sales, right? And two, your credit sales. In other words, there are two components of your sales that you're looking at. The cash sales, where the customer comes in, buys the goods and pays for cash. Cash sales. We're receiving the money, everything's hunky-dory. But your credit sales is where you first sell to your consumer on credit. Obviously, you're going to agree to certain terms with them, and that will then determine how you are going to receive the cash from your debtors. So the credit sales component is very, very, very important. What is it that you need to consider with credit sales? One, factors that you need to take into consideration when you are selling your goods on credit. There has to be proper screening of customers. In other words, you don't just give credit to anybody that walks in and asks for credit. No, there's a screening process that you have in place to ensure that the person that you are providing the credit to would be able to meet the commitments. Very important. Because in terms of the National Credit Act, you cannot give a debt to a customer who cannot afford to pay you back. Okay? So look at the emphasis. It's not just a case of selling on credit. No, it's proper screening and processes in place to ensure that the person that you are giving the credit to will have the ability to pay back and to settle and to service that debt. So the onus lies with you as a business, because in terms of the new Credit Act, that onus lies with the business. What factors will you take into consideration when your goods are being sold on credit? One, yes, it will definitely increase your sales. Obviously, because you're selling on credit, your sales figures will increase, but at the same time, there is the possibility and the risk of bad debts, right? Now, just a word about bad debts here. Remember we said bad debts is a non-cash item. It will not feature in my cash budget. However, it still remains an expense for the business. In other words, if there are bad debts, which is an operating expense, it's going to decrease the equity of a business because these are expenses that we are going to incur. Just a further explanation on bad debts. Don't take for granted in a school situation where you assume that, okay, you just write off a bad debt. No, you follow processes. Due process is followed in order to ensure that we try every possible means to recoup the debt. If that is not possible, then the last measure obviously would be to write off the debt as a bad debt, as an irrecoverable debt. Okay. Also, with credit sales, you're going to have an increase in your admin expenses. Like what? You'll also have to maintain and monitor the debtor's account. So, meaning, once you sell on credit, you'll now have to establish a credit department, which will now take into consideration and control our debtors to ensure that everything that needs to be done with our consumers, that means those that are buying on credit, all the items are taken care of and all the procedures are taken care of. So obviously, from a business perspective, you're now establishing a credit department, which all obviously means more personnel and definitely an increase in your administrative expenses. Okay, when you're drawing up a debtor's collection schedule, remember, this will reflect the amounts expected. The debtor's collection schedule, let me put it to you so that you understand exactly what it is, will reflect the amounts that we anticipate to receive from our debtors in terms of the terms of agreement. That means when you're selling goods on credit, you're going to establish with the debtor, telling them exactly this is how we expect you to settle your debt. One, what will we get from our debtor's schedule? So, before we even go there, the most important figure when you are working with a debtor's collection schedule is one, your credit sales, your expected credit sales, and two, the actual credit sales. So this is something to remember. Debtor's collection schedule, the moment you see that, immediately you hone in, you focus on credit sales. Because your credit sales will determine your debtor's collection schedule. What information will we have when we are preparing the debtor's schedule? One, your credit policy that determines the period for collecting debtors' accounts. The trader must clearly indicate the credit terms to be allowed. Now, when we talk about credit terms, what are we saying? We are saying we are allowing you 30 days, 60 days, or 90 days in which to settle the account. Generally, the norm, right, or the generally accepted practice in the industry is you allow your debtors 30 days in which to settle their accounts. Okay? Now, everything beyond the 30 days means you are now financing that debt and you're allowing the debtor additional time. But obviously, depending on the needs and depending on the situation, you could allow for 60 days, but obviously that will be determined by the actual question that we are dealing with. When dealing with your debtor's collection schedule, remember the settlement discount the customer can be entitled to when he pays before the stipulated date. For example, if you tell your debtors, if you settle your account within 30 days, you are entitled to a 5% discount. Okay? So obviously, you'll see when we go into the calculations how that would impact on our collections from our debtors. Why do businesses do that? Why do they allow for the settlement discount? It's very clear. The quicker your debtor pays you, the quicker your money is transformed into cash, and the more cash you have available, meaning that you would then not, or you should then not experience any liquidity problems. Okay, so keep this in mind. The settlement, obviously this is stipulated in your agreement with your debtor when you initially set up your debtor's agreement. So, what you can see, if we have to summarize what we have done in the first segment of our lesson today, we've spoken about the sales budget and how it impacts on my receipts in terms of the cash sales. That one is self-explanatory because those are goods that you're selling for cash. However, when it comes to the credit sales, this year, it's not a case of just selling to anybody that comes and asks you for credit. No, we said there's due processes that need to be followed. The screening of debtors, you'd ask for information regarding their credit history, and there's a whole lot of information that you would take into consideration. Why? Because like we said earlier, the National Credit Act stipulates that the onus is on the business to ensure that the person that you are giving credit to would be in a position to settle that debt. Very, very, very important. Okay. And then we said, with the credit sales, okay, the credit sales is going to be the most important figure when we are doing our debtors collection schedule. So in other words, the moment you see debtors collection schedule, immediately you realize that I need my credit sales. This would then give you an indication of how you would then collect your money from your debtors, right? We also said when we're looking at the debtors, we refer to the terms of the agreement. In other words, how are you expecting your debtors to settle their debt? In other words, are you allowing them 30 days? And if you are allowing them 30 days, are you having a settlement discount in that? Let's just go on a bit further with the discount and explain why this is necessary. Discounts are given as incentives to our debtors. The idea is the moment you've sold goods to a debtor, so in terms of your agreement, if they settle within 30 days, then you have budgeted for that. But if a debtor takes longer than 30 days to settle the account, it's going to put you in a precarious position. Why? Because you were expecting to receive the money within 30 days, you're not receiving the cash, and you can clearly see it is now putting a strain on your cash resources. So therefore, the drawing up of your debtors collection schedule is of paramount importance. It will give you an indication of what you expect to receive from your debtors. Now remember, it's again an expectation, it's a forecast, it's not what's actually going to happen. And therefore, you will find out that your debtors collection schedule would actually feed in to your cash budget. Why? Because we said it's credit sales. From our credit sales, we moved on to our debtors collection schedule, which gives you an anticipated or a projected amount of what you expect to receive from your debtors. And then finally, that would feed into your cash budget, where you would say receipts from your debtors. Okay. So, having mentioned all of that, what is important, if we can just go back here to see that there was one slide I think we needed to elaborate. This one here. Your credit policy determines the period for collecting debtors' accounts. You have to clearly specify to your debtor. Now, obviously, If a debtor does not comply with the credit terms, then you need to take action. And when you are taking action, what are we talking about? What do we do when we're taking action? Firstly, send reminders to your debtors on a continuous basis, right? If they're still not complying, then you call them in, and there may be some kind of debt counseling that needs to be done. And finally, if that doesn't happen, then you have what is called a handover. It means you hand over the debt to a debtors collecting agency or to a legal expert to try and recoup the debts from your debtor. So all in well to sell on credit, but remember, it has its disadvantages. Okay? That's it for this segment, guys. Let's freshen up. When you come back, we'll move on into the debtors collection schedule. See you just now. Welcome back, accounting boffins. Guys, we're busy with budgets. Our emphasis is the debtors collection schedule. We've looked at all the detail before we arrive at a situation now where we're actually going to sell to our customers on credit. Okay, so this is what we have. We have a table which indicates to us the name of the business and the credit sales. Be extremely wary of this when you are doing questions, whether it be for class purposes, exam purposes, revision purposes. The debtors collection schedule is totally dependent on credit sales. So, if you are given total sales, then make sure you convert or you calculate the component of that sale which is on credit. In this particular example, we are given the credit sale, so there's nothing to change because that is what you need to draw up your debtors collection schedule. Right, what do we know? We know that the months that we are working with will be July, August, September, October, and November, right? You are also told that those were actual sales for July and August, and obviously your budgeted would be for September, October, and November. So what is important is to read the information and make sure you understand what is being required. Now, how are my debtors paying their debt? How are they settling their debt? Watch. They settle the accounts as follows. 50% during the month of sales. That means in the transaction month. So an example of that would be, if you sold goods on credit in August, then you expect, now this is where the challenge comes in. Based on this question here, you expect 50% of the August credit sales to be paid in August. They're telling you that. 50% during the month of sale, normally the transaction month. Then you expect 30% of your debtors to pay the month following the month of sale. So if you sold in August, 50% will pay you in August, 30% will pay you in September. Can you see? 30% during the month following the month of sale. It means 1 month after the sale month. So clearly you can see. Again, keep focused. August is when we sold on credit. 50% will pay us in August. 30% will pay us in September, right? So you can clearly see the flow of information. Okay, guys, so let's just look at this and see at what point are we. We said that in August, we had 50% of our debtors settling, right? Then we said September was the 30% of our debtors were settling their accounts. So 50% in the month of sale, as you can see, August, 50%. September was a 30%, they settling in September. Now we come to the third month, which is October, right? And 18% of your debtors will settle during the second month after the sale months. That means 2 months after the sale, which is your 60 days. So clearly you can see the 18% is now in the month of October. So we sold the goods in August. The credit sale took place in August. Let's make sure we understand this. The credit sale took place in August, right? 50% will pay you in August. So there's my 50%. Then we went to the next month. We said 30% will pay after 1 month. That means in September, you expect 30% of those debtors, the August debtors. Keep that in mind. The August debtors, right? 30% will pay you in September and 18% will pay you in October. Clearly you can see that. Right, and you are also told that 2% is irrecoverable. That means you expect 2% of your August debtors not to pay you at all. Right, in other words, you're expecting to receive 98% of your August credit sale. Do we get the 98%? Let's check. 50 plus 30 is 80, plus the 18 will give you 98%. Obviously, you are told, or the expectation is that 2% will not pay you at all, and those will be your irrecoverable or your bad debts. Okay. Now, what is required of us? Based on that information, we are required to calculate the expected collections from debtors during the budgeted months of September, October, and November. So you're drawing up a budgeted period for September, October, and November. But now once again, what I want you to see is that you do not only focus on September, October, and November. Why not? Because, let me just show you the previous slide, just to make you aware of what we are saying. If you sold goods on credit in July, how will your customers pay you? Some will pay in July, 50%. Some will pay in August, 30%. Some will pay you in September, the 18%. Can you see? So your July credit sale is going to impact on September, which is in your budget period, September, October, and November. Clearly, you must be able to see this. And that is why it's important that when you're drawing up your table, to ensure that you make or you cater for all the months that will impact on your budget period. Your budget period is definitely September, October, November, without doubt. But it's in terms of what will impact on the budget, it's not only September, October, and November, but there are other months that will also impact on your budget period. For example, look at August. Will August impact on my budget? Yes. How? Some will pay me in August, the 50%. The 30% that will pay me in September is going to impact on my budget period. The 18% that will pay me in October is going to impact on my budget period. So clearly you can see that you need all the months that will let's just, as an example, let's take June, right? Will June impact on my budget period? Let's check it out. If I sold in June, some will pay me in June, 50%. Some will pay me in July, 30%. Some will pay me in August, 18%, right? And obviously I wrote off the other bad debt at the end of that. So my June's credit sale does not impact on my budget period because June will be June, July, and August. But my budget period is only September, October, and November. So, very important, when you are drawing up a debtors collection schedule, is to firstly identify, 1, the credit sale, 2, the budget period, which is September, October, November, and 3, which months will impact on my budget period. So clearly you can see that a debtors collection schedule has to take into consideration all the months that would impact depending on the period of the budget. Okay guys, now I'm sure you can't wait to do an actual debtors collection schedule. But let's not be hasty, let's take a quick break, and when you come back, then we'll do an actual example based on the information that we have, and you'll see how we actually draw up a debtors collection schedule. Take a quick break, see you in a jiffy. Welcome back, guys. Remember, we said debtors collection schedule. Again, let's just emphasize, what do we require when we're doing the debtors collection schedule? 1, we need our credit sales. We need our credit sales. Here we go. Let's go back. Right, here we go. We have our credit sales, and that's the most important aspect of my debtors collection schedule. What is that? The credit sales. Looking at my information, what do I have? I'm told that these are my credit sales, so immediately I know I'm starting off from a figure that I will be using, right? We also take into consideration that if you are given the total sales, first determine the credit sales before you can move into the debtors collection schedule. Number 2, you also need the payment terms that have been agreed with your debtors. In other words, how are they going to pay you? Remember we said 50% in the month of sale, then 30%, 18%, and the 2% that is written off. Okay, now, immediately once we have that information, we can start doing our actual calculation for our debtors collection schedule. Let's start. Remember we said, look at the months that will impact on my budgeted period. So what is my budgeted period? My budgeted period is September, October, and November. That's my collection period, right? However, the credit sales is not limited to those months. Why? Let's explain again using a concrete example. I know that my actual credit sale for July was 80,000. Therefore, watch, I start off with my 80,000 as my starting point. And what do I know? How are my debtors paying me? They pay me 50%, so 50% would have paid me in July. 30% will pay me in August, and 18% will pay me in September. Does that July impact on September? Certainly it does. How? By taking our sorry guys. On this one here. That's it. Okay. Okay, got it. Okay. James, I'll pick it up from the 80,000, right? Yes, yeah. So I can just go to the calculator. Perfect. Right, so let's do the calculation now using our calculator, and we can clearly see that we work with 80,000, which was my credit sale, right, times the 18%, which I anticipate to receive when? In September. And if we do that calculation, you find you get a figure of 14,400. So here goes. July sale impacting in September. You can see July is the 18%, and therefore in my debtors collection period, I'm anticipating to receive an amount of 14,400. Can you see? It's based on my July credit sale, guys, important. It's based on my July credit sale. Okay, you see that. Good. Let's go to the next one. Remember, we're busy now with August because we've dealt with July. July has worked itself out. We received in July, we received in August, and we received in September. We now come to the August credit sale. Step number 1, identify your August credit sale. It is 90,000 Rand. And yes, you can see we actually put it into our debtors collection schedule. So we know now which figure are we working with. The credit sale for August. Clear? Okay. Now, August, how is August impacting on September? Very clear. Here's my August, here's my collection. Can you see? It's set out for you so that it makes it easier when you are doing your calculation. So keep this in mind when you are doing your debtors collection schedule, that you have the actual terms in front of you. So August would be 50% in August and 30% in September. So once again, what do? This is what I do. I take my August sale of 90,000. Let's do that. 90,000 times, what's the percentage? Here you can clearly see 30% times 30%, and that gives me a figure of 27,000. So my credit sale was in August, but I'm anticipating to receive 30% of that money when? In September. So there we go. September, I'm anticipating this figure here of 27,000 from my August credit sale. Okay. But if I look at August, then I know I'm going to receive in August, I'm going to receive in September, right? And I'm going to receive a component in October. Remember that? August, it's August 50%, September 30%, but October there will be an 18%. Therefore, I take my August sale once again, which is 90,000, right? So basically, guys, this means that 18% I'm expecting to receive in October, and that figure is 16,200. As you can clearly see, there's your 16,200, and this means, therefore, that I now have my, the August sale has been broken up into all the anticipated receipts, namely September and October. Clear? So in this way, you take each month. Let's go to the next month. The next month that we are dealing with is September, right? And if we look at our expected collection from our debtors, we're starting with the September sale, which was 96,000. We've identified it. What was the important factor? It's the credit sale, not total sales, not cash sales, but credit sales. Okay, established. Credit sale for September was 96,000. Okay, now you're supposed to be getting into the flow, and you're supposed to be doing this calculation with me. Another important aspect, guys, is part of your debtors collection schedule is a calculator skill. You need to know how to use your calculator. Here we go. 96,000 will pay us, 50% will pay us in September. Immediately I say, fine, get my calculator out, take my 96,000, which was my total credit sale, 96,000, okay, times the 50%, and it gives me a figure of 48,000. Here's my 48,000, which was 50% of 96,000. So that's September sale, 50% in September. There's it sorted out. There's my 48,000 for September. Okay, next one. Is September going to impact on October? Certainly it is. How? Take your September sale again, 96,000. Here we go. Take my 96,000, right, times 30%, and you've got your figure of 28,800. Here we go. There's your 28,800. You can see that of your September credit sale, 30% will pay you in October. So therefore, in the month of October, you've got your 28,800. Can you see? Are you getting a pattern? Are you getting the flow of things? You should be at this stage. Right. Will September impact on November? Certainly it would be. Why? September 50, October 30, November 18%. Once again, take my calculator and I say, fine, take my 96,000 times the 18%, and the figure is 17,280. Let's check this out here. Here we go. Here's my September sale, or a credit sale of 96,000. Remember, it's the 18%. I've shown you the calculation. There you can see it impacts on my November, and the figure is 17,280. Right. Notice the pattern. You will see how each collection is dependent firstly on the credit sale and then the terms of agreement with our debtors. Okay, next one. We now move into October, right? Remember, October, if you're looking at your collection period, obviously October can't impact on September because it's the month prior to the credit sale. How will October impact? It will impact in the following manner. October will be 50%. Let's do that first. 100,000 times my 50%. We're not going to use a calculator for that one. It's quite simple. Half of the October figure will give me my 50,000 for the October amount. 50% will pay me in the month of sale. So October, my credit sale was 100,000. And I know that 50% will pay me in October, 50% over 100,000 will give me the 50,000 rand. Right, second one. October is now going to impact on November, right? So what percentage of my debtors will pay me in November, but based on the October sale? That's the important component. Identify the month of sale and then look at its impact. For example, October will be 50% October and 30% in November. Once again, our calculators, out we go. 100,000 times our 30%, and that will give you, we've got an error there, let's cancel that. We've got 100,000 times 30%, and here we go, it should give me a figure of 30,000 rand. Here you can see it, there's my figure, 30,000 rand. Clearly, so once again, a calculator skill. Identify the credit sale. Number two, identify how will I receive my payments. So I know October was 50% October, 30% in November, right? And my budget period ends there. The question arises now, do I calculate the 18% for December? Certainly not. Why? Because my budget period is September, October, and November. And October is only impacting on my budget period, October and November, although the 18% will pay me in December. December falls out of my budget period, or the period that I'm calculating for. So therefore, limit yourself to your budget period and the months for which you will be using that will impact on that budget period. Very important. Okay, the next one that we have is my November credit sale. Step number 1, credit sale. I keep on emphasizing this because if you're using the incorrect amount as your basis for calculation, all other calculations after that will be incorrect. Please, guys. So remember, it's my credit sales that I want. Okay, so I've got my credit sales of 110,000. Step number 1, what component will pay me? I'm working with November, so 50% will pay me in November. So here we go, and we say 110,000 times my 50%, and that will give me an amount of 55,000. So here we go, there's my 55,000. Remember, I'm dealing with November, so it's only impacting on the November collection period. Obviously, November will also impact on December and January of the next year, but those 2 months fall out of the ambit of my collection period. My collection period is limited to September, October, and November. In fact, my calculation is limited to those 3 months. Okay, now we move on, and this is what we now have. You see what I've done initially? I showed you each month on its own. Now, in what you see now on the board is the collective. In other words, there's my July credit sale. Notice I'm going to receive 14,400 in September, and I've shown you that calculation. Then we went on to August, the 90,000. How am I going to receive that? 27,000 in September and 16,200 in October. That was dependent on my August credit sale. Then I went to September, and it would be obviously in September, in October, and in November. Notice the pattern on your calculation. Watch. 1 month, 2 months, and 3 months. Can you see the pattern? It also gives you an indication to see if you are doing the correct calculation or not, right? It's just something that's you can use as an examination technique. Then notice what happens. Now we come to October. How will I receive my October credit sale? I'll receive it in October and November. Can you see? So it went from 1 to 2 to 3. 1, 2, 3. It comes back to 2 again. Can you see? One payment for October, another payment for November. This is just a skill. It's just something dealing with the layout of your calculation, right? And then finally, you came to November, and you then took your November amount. We did the calculation, and obviously that fitted into the November collection period. What we now do is, once we've calculated all the months, remember our budgeted period is September, October, and November. Number 1. Number 2, how are my debtors paying me? 50% in the month of sale, 30% in the second month of sale, and 18% in the third month after the month of sale. Therefore, you could be asked as a separate calculation, and you could be asked to say what amount would be written off as bad debts. That would obviously be as the 2% as a separate calculation. Obviously, this question didn't ask for that. I'm just showing you that that is a possible examination question. You now total September 89,400, October 95,000, and November 102,280. What do we now do? Watch. You now take that debtors collection schedule and you fit it into your cash budget. In other words, if I was marking this in the exams for you, immediately if you had shown me calculations, this would be an accepted mark, this would be an accepted mark, and this would be an accepted mark. Why? Because you've shown me the calculations. You've shown me September's, October's, and November's. So obviously in accounting, we do not apply the double negative. That means we don't penalize you unnecessarily because you've already done the calculation, immaterial whether it's correct or incorrect. The fact of the matter is you understood that the debtors collection schedule will fit into my cash budget, as you can clearly see it here. Here's an extract of my cash budgets. Here's my receipts from my debtors. Where's the calculation? In my debtors collection schedule. Okay, this means therefore, guys, that you should now be in a position to tackle any question on a debtors collection schedule. And yes, you should be able to ace it. Because what we've done today, we've explained to you how to go about drawing up a debtors collection schedule. From me, Ashraf Patel and the team, keep your feet on the ground, reach for the stars, and definitely you will be an accounting shining star. Goodbye.